In the complex world of international finance, trust and security are paramount. When you're sending or receiving money across borders, especially with a non-bank institution like Wise, it's natural to wonder, who exactly is watching over them? As a finance expert, I often get asked this question, and it's a vital one. The answer isn't a single entity, but rather a global network of regulatory bodies that ensure Wise operates safely, transparently, and legally in each country where it offers services. The foundation, e-money institutions, and money services businesses. As we discussed previously, Wise is not a traditional bank. Instead, it operates as an electronic money institution, EMI, or a money services business, MSB, depending on the specific jurisdiction. This distinction is crucial because EMIs and MSBs are regulated differently from traditional banks, but they are still heavily regulated. The primary goal of these regulations is to protect customer funds, ensure your money is safe and accessible, even if the company faces financial difficulties, prevent financial crime, combat money laundering, terrorist financing, and fraud, promote transparency, ensure that fees and exchange rates are clear and understandable, maintain market integrity, foster fair competition and reliable services in the financial sector. A global web of regulators. Wise operates in numerous countries, and to do so legally, it must comply with the specific financial regulations of each region. This means Wise holds multiple licenses and is supervised by a variety of national regulatory authorities. Think of it like a multinational corporation that must follow the laws of every country it operates in. Here are some of the key regulatory bodies that oversee Wise in major markets. United Kingdom, UK Wise Payments Limited is authorized and regulated as an electronic money institution by the Financial Conduct Authority, FCA. The FCA is a leading financial regulator globally, known for its stringent rules and commitment to consumer protection. European Economic Area, EEA, for its operations across the EEA, which includes countries like Germany, France, Spain, etc. Wise Europe SA is a payment institution authorized and supervised by the National Bank of Belgium, NBB. This authorization allows Wise to passport its services across other EEA member states. United States, US. The regulatory landscape in the US is more fragmented, with oversight at both the federal and state levels. Wise US Incorporated is licensed as a money transmitter in various states and is supervised by the respective state regulatory authorities, e.g., New York State Department of Financial Services, California Department of Financial Protection and Innovation. It is also registered with the Financial Crimes Enforcement Network, FinCEN, a bureau of the U.S. Department of the Treasury that combats money laundering. Australia, Wise Australia Proprietary Limited is regulated by the Australian Securities and Investments Commission, ASIC, and holds an Australian Financial Services License, AFSL. It is also a reporting entity with the Australian Transaction Reports and Analysis Centre, AUSTRAC, Australia's financial intelligence agency. Canada, Wise Payments Canada Incorporated is registered with the Financial Transactions and Reports Analysis Centre of Canada, FINTRAC, as a money service business, MSB. Japan, Wise Payments Japan KK is regulated by the Kanto Local Financial Bureau and licensed as a funds transfer service provider. Singapore, Wise is regulated by the Monetary Authority of Singapore, MAS. Brazil, Wise Brasil Corretora de Câmbio and Wise Brasil Instituto de Pagamento are authorized by the Central Bank of Brazil. This is not an exhaustive list, as Wise continues to expand its global reach, acquiring necessary licenses and adhering to local regulations wherever it operates. How regulators protect your money. The safeguarding principle. Since Wise is not a bank and your funds aren't typically covered by national deposit insurance schemes, like the FDIC in the US or FSCS in the UK, a key question often arises. What happens to my money if Wise goes out of business? This is where the concept of safeguarding comes in, a fundamental requirement imposed by regulators on EMIs and MSBs. Instead of deposit insurance, regulators mandate that Wise and similar institutions keep customer funds entirely separate from its own operational funds. This separation is achieved by holding funds in segregated bank accounts. Your money is held in dedicated accounts at major, reputable banks like Barclays, JP Morgan Chase, Citibank, etc., that are distinct from Wise's working capital. Investing in secure, liquid assets. A portion of customer funds may also be held in highly liquid, low-risk assets, such as government bonds, which can be quickly converted to cash if needed. The critical implication of safeguarding is that Wise cannot use your money to run its business, lend it out, or invest it for its own profit. If Wise were to face insolvency, these segregated funds would be protected and returned to customers, rather than being used to pay off the company's creditors. This ensures that your money is always available to you,